Hi guys, Shami here. So today I'm just going to talk about a trade I recently did, and I profited around about $21,000 off this trade in 6 days. And I'm just going to run through exactly how I did it from scratch. So first of all, I just want to talk about the trade identification. So I identified this trade by knowing that it had a recent earnings announcement, so I wanted to see what the earnings reaction was. So firstly, the trend was going up. So you can see that there's a series of bull flags happening. So right there and over here, this bull flag didn't work. So what we saw here is when this bull flag didn't work, we didn't see the price just go sharply downwards. So what we saw was the price actually consolidated for a period of time, and it held a range. So the range here was between 80 and it held that sort of 62 level. So we had like kind of like a 20-cent range. So the range was like around about 20% range. So now that we know that this range is held for a long period of time, and we know that the stock has gone up, then we kind of know that it's ready to break out and it's ready to continue higher. So normally for a stock to continue higher, it needs a catalyst. So here we saw an earnings announcement on the 26th of November. But on the 26th of November, when the earnings announcement came out, we saw that it kind of opened at 73 and closed lower at 69 cents. So this would mean that usually the earnings wasn't taken well by investors and stuff straight away, and the investors need time to actually analyze the results of PEB. We also saw that when people did sell on the earnings announcement, there was actually not much significant volume coming into the stock, meaning that there was not much selling going on. And then what happened is the stock kind of consolidated the next day, and then for a couple of days here you see that the strong volume started to come in. So here you can see that compared to the bars, you can see that there's a lot of volume just starting to come in on this particular day here. And you saw a slight gap up from 71 to around 73 cents. So a gap up means when a stock opens higher than the previous day. So the previous day here it closed at 71 cents and it opened at 73 cents with strong volume. So we know that the stock has had a recent catalyst, which is the earnings announcement. And we also know that the stock is consolidated for a period of time. This is also a great stock to trade because it has a tight spread. So the spread on the stock is 1 cent. So if you're buying at 78 cents, then you know that the seller's at 77, and you know that the seller's at 78 cents, and you know that the buyers are at, let's say, 76 cents. So there's a 1 cent spread. So now that we know that this is a perfect candidate for a trade, we know that it's got a series of bull flags, it's on an upward sort of trend, it's consolidated for a while. It's also had an earnings announcement. There's large volume coming into the stock. So this large volume that's coming into the stock here, so this could mean institutions are buying, this could mean investors are buying, this could mean that traders are looking to get into the stock and they're looking to trade it higher. So there's many reasons why there's lots of volumes coming into play. But the volume is important because buyers push prices higher, because when there's only a limited amount of shares available, then what happens is buyers start to chase higher prices. So if there's no more shares available to buy at 81, then people start to buy at 82. There's no more shares available to buy at 82, then people start to buy at 83. So here we can see on the 2nd of December, you saw the strong volume coming. And then next day you saw a little bit lower volume here, followed by like a smaller candle. But the next day you saw even more strong volume. So this looked like, and it was pretty prime for a breakout trade. Simply because that large volume there gives us that kind of hint that, look, this is about to break out. It's got some strong volume. We haven't seen that much consistent strong volume for a while, and it looks like it's finally starting to come into play. So now that we know that, so I'll just show you my sort of how I planned this trade and why I thought this was a very good, perfect trade to do. This is like an A+ trade. So first of all, I just want you to show my trades on PEB, just to show you guys that I'm not joking around or I'm not faking or anything like that. So I actually took a trade here at 75 cents. So 75 was around about on this day here, 75 cents. And then I sold it at 78 cents the next day here. So I took a small 75 to 78 cents. So I did a pretty big position on this, which is like a 40k position, and basically I made like about 1,500 bucks on this trade in one day. So I bought it one day and I sold it the next. And because this is a low price stock as well, it means that the percentage gains on something like this is quite good. So if it moves 1%, if it moves 1 cent or 2 cents, it's moving like 1 to 2% compared to a stock like that is a higher price that moves from like 12 bucks to like 12 bucks 20 or something like that, and it will just be like 0.5% move. So lower price stocks with lots of volume are very good prime candidates for a trade. So I took a small profit there. But then I saw that there's still a lot of volume coming into the stock, and I was like thinking that even though I made a lot of money there, because I'm still trying to get comfortable with using a bit more size, I decided to go in for a good trade and to load up some more shares at around about 80 cents, simply because the stock was looking to continue higher on lots of volume. And I'll show you how I know that there's lots of buyers coming into the stock and why it's ripe for a continuation play higher. So here I'll just show you like my trade. So basically 80 cents is where I got in on the 4th. So if you look on the 4th here, so the 4th was here. So 80 cents. So I got in around about there when this stock price kind of opened, because I saw a market dip that there's lots of buyers, and basically all resistance was being wiped out. There was like large trades going through. Resistance was weakening. There's sellers coming in, but the buyers are kind of stepping up and kind of buying out these sellers. And it was just causing a massive buying to the upside. And I'll show you how I know that there's buying to the upside. So I just opened my market depth on this other screen here, and I'll show you what I use to kind of see the buyers versus sellers. So what I use is the market depth. So the market depth gives me a good view on how many buyers there are versus how many sellers there are and where resistance levels are. So on this trade here, we know that there's a lot of resistance around that $1.99 mark. Hence why the price hasn't gone above that $1 mark. And then I just want to show you how I kind of got into the stock. So basically, when I got in at about 80 cents again, I loaded up more at 81 cents simply because it was going higher. There's lots of buyers on the buy side, and there was lots of sellers. And there was there was clearly defined resistance, and resistance was breaking. So the way I know that resistance is breaking is I go to the quote on direct broking, and I just quickly see like these bars down here. So this allows me to see like at this point here, these large sort of bars. So every morning when the stock was opening up here, the stock was kind of opening and it was breaking for resistance right at the start of the day. So the start of the day and the end of the day are the most volume filled and most volatile periods of the day. So throughout the day, there's usually less volume, and towards the end of the day, that's when large buying starts to happen and occurring at like market prices. So going back to here and just looking at the market depth. So the buyers were stacked up here, so I knew that there was good support around that sort of 80 cent area. So once I went past 80 cents, I knew that there was really good support there. So I was in at 80 and I was in at 81 cents. So I knew that if that 80 cent level broke, then I was out. So I had a very tight stop loss in play. And I wanted to make a minimum of 1 to 2 risk reward ratios. I wanted to risk 1, but I wanted to make sure I was making at least 2 or 3 times what I'm risking. Because I know this is a high probability trade, because when you trade, you want to always be trading with the trend. And with this particular trade, like it's ripe. It's got a nice uptrend. It's consolidated for a while, and the longer a stock consolidates sideways, it means the longer period of time that the buyers and sellers kind of even out. So the buyers and the sellers are kind of, the volume's kind of coming in. People buying, the price is rushing up and down. The price finally comes to kind of like an equilibrium before it starts to continue higher. So, and these recent trades here. So when you know that there's a resistance point, let's say there was like a large amount of resistance at 98. You can see these recent trades. So the recent trades is quite good for seeing like large trades going through. So there's 15,000 and there's 14,000 volume and stuff on trades. It's breaking that resistance. So when that resistance is breaking, it means that the buyers are just breaking through these levels and buyers are just chasing higher prices. So this is what you can take advantage of in terms of trying to make money in the NZ stock market. I mean, like, you know, there's people that invest, but if you're smart then, and if you're switched on, you can also trade these stocks higher, because like there's many moves that happen in the stock market all the time in New Zealand. I know people want to trade the US and all that, which is fine. I've kind of just concentrated on the New Zealand market because it's a very good market to trade. It's becoming more liquid than the previous years. There's more retail traders out there. The prices are having more volatile moves, and there's more volume behind these stocks as well, meaning that you're not having much liquidity issues and you're able to get out fast and in fast and out fast if you need to. So I'll just show you guys kind of like my risk position and where I got in or got out. So 81% was my, 81 cents was my entry price, and I was looking to get out at 79 cents. If I got out at like 75 cents or something, so that means I would have had 4 cent slippage. So slippage usually occurs with stock, like when you're trading. So slippage just means that the extra loss you take on top of what your stop loss level was. So if your stop loss is 90 cents and you got out at 85 cents, then you had 5 cent slippage. Slippage tends to occur, but it's just one of those things that you just have to take on the chin and move on. Obviously, the less slippage you have, the better. And in order to avoid slippage, you want to make sure that you have your stop losses on like areas of support where it's like a lot of support there. So even as your sort of stop loss level is breaking, you can get out with that as well. So, which is cool. So on this, I made around about 23%. So I managed to get out at an average price around about 98 cents. So I made about 20%. So I basically risked, so 8.5, risk 1 to make 8.5 times my money. So I did do quite a large quantity on this, and I knew what I was risking on this trade as well. So I stuck like 100 grand behind this trade, and my risk was 2.4%. So I would have lost 2 or 3 grand. So I was willing to risk that because I knew the potential that the stock had. I thought it would probably run to $1.20, $1.30. CBD earlier ran this year as well. I could have made a lot of gains on that, but due to being busy in my business and stuff like that, you're not always able to catch every single trade. Not able to catch every single move that's going to be out there. If you see something that looks right, just try and concentrate on it. You can't be trading too much. And a lot of mistakes that I see from like newbie, investors and newbie traders and stuff is that first thing is they don't know how to cut their losses. You have to get out. If this went the other way for me, even if there was a bit of slippage, as soon as it goes below my stop loss price, I'm out. There's no arguing with myself. I had to press that sell button. I had to sell. I'll take the loss. I'll just take it, because you shouldn't be attached to your P&L. You should be attached more to your process. What was the process behind this trade? Like, did your plan work? Everything that you said was going to happen, did it happen? Why didn't it happen? So every time you do place a trade, just make sure that you're sort of writing your kind of notes behind it, because that's going to help you know what went right and what went wrong in your trades. So this is, again, I'll just show you my results. PEB, just to make sure that you guys don't think I'm lying or I gambled on this trade or anything. I know there's going to be a lot of haters, saying, oh, this guy made like a one-off, he put too much size behind it. But everything is calculated. I've been doing this for 5 years. And, I've been burned a few times. I made good gains. I made, some losses as well along the way. But that's the thing. You just learn. And this is going to sound a bit strange, but like the key to being successful in trading is just to not give up. It will work. It might take you 7 years. It might take you 10 years. It might take you might learn in 2-3 years, like the more trades you do, the more experience you'll have when going into trades. Because what happens is when you're doing trades a long time, if you go on, like, let's say you're just starting off and you win a couple of trades at the start, then all of a sudden you lose 5 trades. You never know, but after you lose your 5th trade, you could go on a winning streak and just like have like 4 winning trades and then 2 losses, then 6 winning trades and 3 losses, then 10 winning trades. The thing is, you don't know that track record is going to happen if you just give up straight away just after losing 4 or 5 trades. So after you try, so the thing is like you're trying to have to find consistency in this market. So, and you know, being like a kind of like a seasoned trader, I know that, you know, there's a few rules that I kind of live by, and, you know, trade uptrending stocks. Stop going for reversals. I always tell people that. Don't trade something that's just on the way down. It's like trying to catch a falling knife, you know what I mean? You're going to get cut on your hand and you're just done. So, there we go. Again, so basically I bought $75,000, sorry, I bought 60 grand worth of shares on the 4th, which was on that day there. And then I managed to catch some more on, wait, the 4th to the 7th. Oh, okay, so this must have been the Friday. That must have been the Monday or something. Cool. So I managed to catch some more on the Monday at 81.94. So that gave me an average around about 81 or something. And then I kind of, as it started to get up here, I knew that I was getting overextended. I sold off half my position at 97. So since I sold off half my position at 97 here, on the 9th, right up here, because what's happening is the stock is moving, the price is too far away from the 9 moving average. So the 9 moving average is kind of like a magnet. The price will always come back to 9 moving average at some stage. And the best thing to do to catch these profits is just sell off half your position. And if you sell off half your position, then you're locked in a profit. So I locked in 10 grand and I was like, it calmed me down a little bit. Like I made a profit. If it does swing the other way, I know that I've made a bit of money and it's okay. And I'll let my other half just trail higher. And then I eventually got out the next day at 99 cents simply because it opened here and I was in front of the computer I was actually on my phone making coffee, you know, I was like whipping up the coffee and stuff and had my phone down here and then I was like, oh shoot, this didn't break. So I just quickly sold and I was, you know, finished off the coffee, gave to customers, they have a nice day and stuff. But like, yeah. So basically I sold and I was, you know, I was constantly looking at the order screen. Oh yeah, it's all sold now, so it's all good. And then yeah, so then I profited, you know, so 21,000, so which is quite good. This is actual, you know, settled. I don't know what you guys, this is just like a real statement. You can ask direct broking. You know, you can just basically add these two together. So 60 plus 4, like 100. Yeah. So just add these ones together just to prove how much I made. So 60,503.85 plus 61,751.35. So that was my settlement value of my 2 sell orders. So, and I just want to minus what I bought it for, 0.5184 minus 60,119.90. And then that's how much profit I made on this trade in 6 days. So that's phenomenal, you know. So this capital that I have, you know, so it's a mixture of just savings and gains all into one, because the more you trade, like you want to start off small and then you want to gradually increase your position size as you get more experience and as you find more consistency in the market. So yeah, cool. So I hope this gives you a few tips on how to trade, you know, the NZ market. I mean, there's so many different ways you can trade it. You can even, like this is a daily chart, by the way. You can even have like a monthly chart if you wanted to extend it out a little bit. It just depends how you want to trade. What's your trading style? Like you have to trade in a way that suits you. I mean, if you want to use a shorter time frame, you can. Just make sure that, you know, your stock has good volume, daily volume behind it. And if you want to swing trade, I find before I was a bit like, you can day trade sort of, you know, high volume stocks in NZ, but there's not much going on. But then when you look at swing trading, it's actually quite good. So with that, what you're able to do is you're able to plan your trades quite well. You don't have to sit in front of the computer all day. You can just add alert levels when the stock goes up or when it goes down. You just get alerted and you can just sell whenever you want. So yeah, that's sort of the way I kind of trade and make money in NZ market. But yeah, if you guys want to do a different way, then that's all right. So thank you guys for watching my video, and as always, you know, hit the like button below. You know, helps with the YouTube algorithm, as all the YouTubers say. So yeah, and definitely, like, you know, I'm just proving that, you know, you can trade in the NZ market. I know everyone invests, you know, talking about like, you know, company, this, you know, this company's doing this and this company's doing that. And, you know, I'm just looking at the charts saying, oh shit, this is volume. I don't even know what this company does. What is PEB? I don't even know. I just look at the stock ticker and, oh shoot, okay, this is going up. This has got a lot of volume. It's looking good. It's consolidating. It sees buyers, less sellers, you know, everything's going well. So that's all good. But anyways, thank you for watching, and like and subscribe my channel. Hit up my Instagram at SoloDayTrader. So Solo Day Trader is where I am most active. I'm not that active on YouTube, but I thought I'd just put up this video just for people to kind of, get some tips on how you can trade. So yeah, so I'll see you guys later. Peace.